Hello everybody, welcome back to a brand new video. In this one I'm going to be showing you the basics and basically an overall more inclusive guide on how to use the CFD side of Trading 212 step by step. So if that sounds good, please leave a like on the video and also subscribe and I will explain everything to you. Now if you want to see the other side where I talk about the invest, that should be coming out tomorrow, and if you want to see where I talk about both sides and compare them, that's been in the last video, and it's also been basically described what each of them are in a previous video, but in this one I'm just going to be explaining how they all work and how the CFD side works tonight. So first things first, what you need to know: you've got three levels on the top. You've got a green, which is basically the safe zone. You've got a margin call that's below, I think it's like 50%, and that's when you're at risk of your account being or your positions being stopped, and they actually get stopped at around 29%. So if your account goes down to 29% of its value or less, you will basically lose your position and lose your money. So it's important not to do that, so bear that in mind when you are investing. These are just the basics, of course. So account value in the middle, the smaller circle that's not even complete in the very middle is in purple, and that is the positions that you hold. You can see that below there. Obviously mostly free funds, so that's why mine's green, and a little bit blue on the outer circle for blocked funds, and that's just to compensate for if the values of stocks and investments go up or down. So when we're looking at the things, there's many things that we can invest in, as you can see. I'm just going to explain this as simply as I possibly can. So we're going to look at one of them, and we're going to just go for Tesla randomly because it's at the top of the list and it's a popular stock. Now you can see two options here. We can see buy and sell. So what does that mean? Buy means that we anticipate the price going up, and sell means that we anticipate the price going down. So the thing about the CFD side is we can expect large moves quite quickly because we trade using leverage, which means we can actually buy more of a stock or a asset, and also it means that it can affect the price in a good way. It goes up higher, and in a bad way, that means when the price goes lower, obviously we are affected by that more, so the price goes down in our portfolio even lower. So to place an order, you simply choose the amount that you want and press buy at the desired price. Now sometimes it might be a good idea to wait for the price that you want, because otherwise you could end up losing quite a lot, because as you can see, in 1 minute and 100 Tesla, we got minus 50, and now it's already up to minus 45, so that just gives you an impression of how fast this moves around. But yeah, you can see here, when we go to the middle, we can see pending orders. These are orders that we've placed, and then we've got open positions, and these are obviously positions in stocks and shares and commodities which we actually have open at the minute. Now if you want to see your trading history, you can go back here and see all of your closed positions and how they worked out. And you can also go and see other details on the report side, so we can see things like the result, how much money you have made or lost. You can see the interest that you've made, and you can also see the cash that you put in. So it just gives you a good basic guide of what you're doing, so that you know how much you're going to lose or win, and you can see your profits and visualize them clearly. It also shows you the orders that you've put in at what time and price, so it's very, very nice for that. Anyway, this has just been a quick introduction to it, and I hope that you enjoyed it. If you did, please leave a like, and I'll see you in the next video. Goodbye.